Is this thing recording? Okay, there's it recording now. Okay, let's look at managing inventory. So basically what managing inventory is all about is about how to place orders, your demand, your daily use, your lead times, and your safety level. Okay, and how the storing and handling of inventory should take place. So I'm not really going to go through the theory of it. You need to go through the theory. You might get a theory question on that. So let's look on page 305 where they talk about the basic EOQ model. Can I just ask you that you all just mute you? Just going to mute everybody. Okay, can I just ask that everybody put their student numbers and their surname, name, surname in the chat? That's the first thing. So let's look at on page 305 the basic EOQ. Okay, so the basic EOQ assumes that the number of units that will be required for sales of production is known and constant. So once we have those, we can then do the EOQ model. It also assumes that there's no lead times. Example, delivery date follows after the order is placed, and there will be sufficient inventory available until delivery is made. It also assumes that the only inventory that are pertinent are ordering and holding cost. Okay, so let's skip a few lines, and there's the formula. EOQ equals square root of 2 times S times F divided by C. Okay, so let's look at EOQ model today. Okay, so let's look at example 12.1 where they talk about the EOQ model. Dolly Limited sells porcelain dolls. The fixed cost of placing one order to purchase dolls is 300 Rand, regardless of the number of dolls ordered. The average cost of holding one doll in inventory is 20 Rand. The sales for the year is estimated at 50. So there we can see that we can assume that we have all that information. So if we were to do the EOQ model, right? So we have our sales figure, which is the $50,000, right? We have the cost to place an order, which is our fixed cost of 300 Rand. And we have the purchase price per doll, okay, which is the cost, which is 20 Rand. So if we want to calculate the EOQ, where's the symbols now again? I want to do that symbol. Why can I not find that? Anybody can remember where's it symbols?
Maybe at the insert tab.
Insert and then
Symbols, let me just see.
on
your right hand side, the last
yeah, I
one.
found it. Okay, I found it. Okay, symbols. So I must go equation. No? Let me see if it's there. No, it's not. It's the other one. Insert symbols. Let's go to symbols. It's mathematical, that one. Mathematical. No, vase didn't know. Oh yeah, I found it. How recently used symbols. Insert, close. No, vase, I know. Now, why is the screen doing this?
Column C. It's on column
Okay.
C. Oh,
Oh, there's it. Okay. So you're going to say 2 times, right? That is the standard formula, times S times F divided by C. Okay, and this is obviously in brackets. So we're going to apply the BODMAS rule there. Okay, so I'll put my symbol in again. Okay, so 2 times our order, our sales is 50,000. Right? Times your 300 Rand per doll.
hi, Azzy.
Yes.
There's nothing on your screen. I can't see what
Okay,
you just wrote now, like that promo.
Okay, in the story. You have to tell me every time to reshare.
Okay.
Okay. Right, so 50,000, 2 times 50,000 times 300 is 1.5 million. Right? Let's just insert again. So 1.5 million, right? And the square root of 1.5 million. Let me just see something. Is my calculator? Something isn't making sense here. Okay, yeah, it is 1.5 million. So 2 times 50,000 times 300 divided by 20 gives me 1.5 million. So you type in the square root of 1.5 million on your calculator, and then you get an amount of $1,225. Right? Can you just, everybody know how to type in the square root on the calculator?
No.
Just go onto your calculator quickly and then you look for the square root. You type in 1.5 million, square root find. Everybody got it? Everybody got it?
No, we're
Yes,
still
Aziza.
trying.
Still trying. Just type in 1.5 million on your calculator and then you just press the square root sign. Tell me when you're done, when we can move on.
Yes, we can move on.
Okay, so now we have $1.225, right? Per order. So you take your 50,000 sales and you divide it by your 1.225. Now you will know how many orders you are going to place per year. So in this case, I must place 40 orders per year to meet my sales demand. Right? Okay, so let's look at how we are on page 306. So let's look at the total ordering and holding cost per year. Okay, so the total number of orders is 41. Okay, it's 40 point something. So it's 41, right? Therefore, the total ordering cost of 41 orders times your 300 Rand per order, right? So it's going to cost you 12,300 Rand for the ordering cost, right? Okay, let's look at example. Is it the next one? The next one is on page 307. Let's just look if that example. Okay, now that won't work. Let's look at in your tutorial guide 102. There's an example there. Does everybody have that one? I'll just give you a minute to take it out quickly. It is on page 44, question 12. Everybody got it? In tutorial letter 102, page 12, question 12, page 44. Okay, let's look at that example. They say in Bazzini Limited is reviewing its inventory control policy and is considering using the economic order quantity model to determine the quantity of raw material to order. The purchasing manager of the company gathered the following information: number of production days, quantity of raw materials, cost of placing the order, purchase price, blah, blah, blah. Calculate the annual demand usage. Okay, so let's do that quickly. Anybody want to go? Anybody want to go? The annual demand usage. Oh. Can you see my screen?
Yes, we can see your screen, Aziza.
Okay, Robin, you want to go? To calculate the annual demand usage.
I don't want to go.
Anybody else? Anybody? Okay, so our annual usage number of production days per year is 250 days. Quantity of raw material used per day. We are on page tutorial letter 102, page 44. Okay, so our annual demand, we're going to take out 250 days per year, and per day we need 500 kgs. Right? So you're going to get an amount of 125,000 kgs. That was super easy. Why did you people struggle with that? Super easy. Okay. Everybody get that? Can I move on? Yes, no?
Yes.
Okay.
Yes.
So now we need to calculate our total purchase price. Okay, for the year. Okay, who wants to go for this one? Our total purchase price for the year.
Purchase price per kg, 10 Rand, multiplied by the annual usage.
And it equals 1,250,000. Can you see how number one depends on number two and number three? Okay. So now I want you to calculate the economic order quantity. And that should be super easy. Just put your answer in the chat if you're done. To 101. Okay, Robin, you are wrong. You're not right. You can continue trying. For those that came late, we on tutorial letter 102, page 44. Are you people struggling with this?
Aziza, yes, I am. Tell me, must we say the holding cost 195 times the amount of kilograms that we have to get
You
to the
must
value of C?
you must add it. You must add it to your cost of your purchase price per kilogram. The other person who just entered now was also incorrect. Way off. Was it Kaketsu? Yeah, Kaketsu, you also. What is that answer that you're giving me? Rands or units?
Units.
Units. Okay, I'll just take two more answers still, and then I'll go through it with you. let's do it quickly. Okay, so our formula, let's just put our formula in quickly. Would say something like 2 times your annual demand. So what is my annual demand? What was my annual demand?
125,000
Yes, kilos, right? Just put kilos here so that you can see. Times my cost, my holding cost. Sorry, my holding cost, my cost to place an order, which was how much?
75 rand.
75, right? So you must divide it by, we just make a line here quickly so that the term looks like a divide. Okay, divided by the purchase price per kilogram, right? Which was how much?
10 rand.
Yes, but they also gave us the interest rate charged to finance inventory, right? So you're going to multiply it by your 10.5%. With my percent, okay? Right? Plus, what am I still missing? My cost of kilogram. My cost of 1 kilogram. Of holding 1 cost of kilogram per. It's 1.95 rand, sorry. Right. Let's just calculate. 2 times 125,000 times 75 equals to 18,750,000. Right? Let's divide the bottom part. Right? So 10 times 10.5. Where's the percent here on this thing? Percent equals 0.105 plus 1.95 equals 3. Right? So you divide it by 3. Which equals how much? 1875. 18 million divided by 3 equals 6,250,000. 6,250,000 squared equals 2.5 kgs, 2,500 kilograms. Where did you people go wrong? At what level? At what stage? Is that 2,500? Yeah. Where did you go wrong? At what level did you go wrong? How many people got this part here right?
I got we're calculating C, the holding cost that I got wrong. That's where I went wrong. I
Okay.
didn't account for that interest charge to finance inventory.
Okay. Okay. Let's look at 12.2. What is the financial consequence if one order is placed for the year instead of ordering at the EOQ rate? I'll give you 5 minutes. You think about that and then you give me your. Okay, just type your answers in the chat.
Aziza,
Yes.
you forgot to square root the answer for 12.1.3.
I did square root it. I did square it. I just didn't put the symbol in. Let me just insert the symbol. Are you getting a different answer?
If you square root it, then it's 25.
Yes, the
2005.
25. Can you see it? Is the screen frozen?
Oh, I don't see it on the screen. Sorry.
Okay, can other people see it? Can you all see the 25?
I think your screen is frozen again, Aziza.
It's so cold here. It's freezing my screen even. Okay, can you see it now? But
Yes.
thanks
Yes.
for
Like,
noticing that. Thanks for noticing that if it was a mistake. Okay, I'll give you 2-3 minutes left. Okay. Who's got um who's got the answer for one order? Anybody want to do one order? Our annual usage is 125,000. There's actually one note too many here now. Yeah. So our annual usage is 125,000. We divide it by our EOQ amount of 2,500. Right? Yeah, I'm talking nonsense. We divide it by 2. Right? That is the 2 there in the formula. Right? And then you multiply it by this 3 rand here, the 10 times 10.5 plus the 1, you multiply it by 3, right? Then you get an amount of 187,500, right? The ordering cost is 75 rand, right? So your total to order one is 187,575. That's for one cost. Can you see my screen or is it frozen again? Did anybody get this right? Okay, so let's do now versus your EOQ. Okay, I'll give you. Are you still there? Everybody still there? Was it was so quiet? Sorry.
Sorry, it's Rushana. I'm just a bit unsure as to where you get the 12.5.
The 125,000, that's my annual demand that we calculated here on top. Sorry, it is 1,250.
Okay.
My annual demand here on top. The 125,000 kilos.
Okay.
Okay. So you have to compare it now versus your EOQ. I'll give you two to 3 minutes to compare that. Okay, anybody want to go? Anybody? No, Robin. You're not right. So to calculate the ordering cost. Okay, so to calculate the ordering cost, we're going to take our EOQ amount, right? And then you divide it by 2, right? And then you multiply it by the 3 rand. Okay, so you're going to take your EOQ amount, multiply it by the 3 rand, divided by that 2 rand there. 2, sorry, not 2 rand. So then you're going to get an amount of 3,750. That's your ordering cost. Sorry, your carrying cost.
Yeah. Is the 3
Okay.
rand part of the formula?
Yes. Yes, yeah. Okay. Your ordering cost, you're going to take your annual demand, which was 125,000. You're going to divide it by your EOQ, and you're going to multiply it by the 75 rand, which was the cost to place the order. Right, so you're going to get 3,750. So that is 7,500. But clearly you can see 187,000 versus 7,500 is a saving in almost 180,000 rand. So it would be more effective, cost effective to order on an EOQ basis. Yeah, 3 rand is this. Let me just go up here. This was 3 rand. If you put this in your, no man. You put this in your calculator, 10 times 10.5% plus 195 gives me 3 rand. Okay, so now you know how to do the EOQ formula.
Aziza, I still don't know how to do it, to be honest.
Okay, where are you stuck?
I'm confused from where we calculate the EOQ. I don't even know how to do that.
Who's speaking Arabic?
It's Rushana.
Oh, Rushana, sorry. Sorry, my screen is closed. Do we
No,
see
it's
the names? Okay, let's go back there. Where are we now? Okay. Waar is ons? Okay. Okay, let's start right from the beginning. The annual demand, we need 3 things. We need our annual demand usage. We need the purchase price as well to calculate the EOQ in this case. So first, step 1 is we're going to calculate the annual demand for the year. So they gave us that there was 250 days and it was 500 kgs. So my annual usage for the year is 125,000 kgs of whatever they're going to use to make whatever they want to. Okay. Let me just see another example quickly. Say I say to you, there's 75 working days in this year, and my usage is 12 liters per hour. What is my annual usage? My annual demand usage. Anybody, just type your answer in on the side quickly. Let's just play with your brains quickly. I'm getting worried now at these answers. Okay, maybe Marilyn is right. Maybe she looks right. Let me just calculate it. Not one of you got the answer right. Let me just go to my chat. Just explain to me, everybody, how you got the answer. I know all the 900 games. Bugs, how did you get 10,800? Luciana.
I got
Marilyn.
it wrong. I think it's supposed to be 21,600 as well, because you take the 12 liters per hour and then times 24 hours and then times the 75 working days. I think that's how the others also did it.
Yeah, but yeah, I wasn't clear on the question, but why 24 hours? Well, I took 8 to 9 hours. I would have accepted like the 8,100 or the 7,200.
That's why my first answer was 10,800, because I took 12 hours there. I didn't know how many hours you want, to be honest.
Yeah, okay, I wasn't clear on that. But remember, yeah, a working day you would have calculated 8 to 9 hours. So yeah, but the 21,600, yeah, that was over 24 hours. Okay, but you get the understanding of the question. Right. So now we got our annual usage. Now we need to calculate our purchase price for the annual usage. And they said to us that it was 10, let me just go back there to the question. It said that it was 10 Rand per kilogram of this item that they were selling or manufacturing. So we take the 10 Rand, right, which is this 10 Rand, times my annual usage, right? So now I've got 1,225,000. Let me put the Rand in front of it, right? So now my purchase price for the year is 1,250,000. Now I want to calculate my EOQ, my economic order quantity. You first thing you do is you take your square root, you open up your square root, right? The formula says 2 times annual demand times your cost of your carrying cost. Okay? Or your cost of placing an order for it.
Again, they
Sorry?
by the 10 times, I think you put in an extra zero again, because the answer for the annual demand was 125 kgs.
125,000.
Sorry, 125,000, but you have an extra zero there.
Where?
By the total purchase
Where do I
price
have
for
the
10 times.
times 10? Oh yeah. Oh yeah.
Yeah, that's what it's.
Okay. The answer was right. Okay, 10 times 125,000. Okay. So 2 times the annual demand, right? Times the cost of placing an order, right? Divided by your holding cost, right? So this is my holding cost, is my cost of placing the order. That 125,000 is my annual demand. So 2 times 125,000 times 75 is how much? 2 times 125,000 times 75 equals 9 million. Why do I get 9 million? 2 times 125,000 times 75. Oh, sorry. Is 18,750,000. So 2 times 125,000 kgs times 75 equals this answer here. The 18,750,000. This year, if you calculate it on your calculator with me, you say 10 times 10.5%, and that gives me 0.105 plus 195 equals 3 Rand. So that is the 3 Rand that we keep on talking about. So 18,750,000 divided by 3 equals 6,250,000. When I put that in my calculator with a square root, I get 2,500 kgs on an EOQ order. You with me, Roshana, now?
Yeah, I'm still getting there though, but I understand what you're saying. I'm just trying to keep up.
Okay, now in the next question, they ask us, tell me which one is better, to order it one order at a time or order it on the EOQ basis. So when I do it on my EOQ base or on my one order at a time, I'm going to take my annual demand, right? You divide it by 2 because the formula says 2 times annual demand, right? And then you multiply it by your holding cost, okay? Which is the 3 Rand. Then you get 187,500. My ordering cost is 75 Rand each for each cost order, right? So if I look at it versus my EOQ, the 75 Rand is my cost to place the order. I take my annual demand usage and I divide it by 2,500 because with the EOQ, you want to know how many times a year will you order, right? So 125,000 divided by 2,500 and you times it by 75. My carrying cost, right? I take my EOQ, I divide it by 2 and I multiply it by the 3 Rand, which was this 3 Rand here. Is it again frozen? I gaan hom in die micro sit. Can you see now?
Yes, it's visible now.
Okay, thanks. Okay, so now you get a quantity price of when I order it via the EOQ of 7,500, and when I order one time, one order, it's 187,575. So there's a vast difference between placing it via one order at a time and versus an EOQ order. Okay, can we move on? The rest of the chapter is not too bad. It's just basically we have to go back now to just look at it on page 308. So the other one of managing account receivables, and this is something that you would probably get in your theory questions. Is everybody with me? I'm back in the book, in the study guide, page 308. Okay, so managing inventory, you will look at the credit policy of the company, right? So basically, in a nutshell, you know, credit policy has an impact on your sales turnover, the credit policy, how strict it is or how lenient the credit policy is, will determine how well you collect the money, right? Your credit worthiness, obviously there's a way or a procedure on how to determine the credit worthiness of the customer, but basically that is also part of the policy. Then you have the credit period. That is how long the client can pay the account. Okay, so if you look at Fushini, they normally say to you 6 months or 12 months. So that's their credit period. Discounts refer to the amount of that customers can deduct from the account they pay earlier in the credit period. So that is normally in terms of big shops like Macro and trade agreements where you get the discount. Collection policies. It refers to the method that the company uses to collect accounts that are past due date. Okay, so how do they collect accounts? Like Edgar's, they sell the books like, or maybe after 60 days, I think, or something like that. Then they sell it off to a private company, and then that company can collect the money. Okay, age analysis is that it will show you how long the days outstanding, okay, are in your debtors. So 0 to 30 days is probably good. 31 to 60 days is probably not so good. More than 120 days is very bad. So let's look at activity 12.2. Okay, so in activity 12.2 on page 311, everybody still following me? The totals of the age analysis of company P and R at the end of the financial year on 30th of June are as follows. So they give us a scenario there, and as I say, both companies do business in the same industry. Company P's credit terms is 3/10 net 30, while company R's credit are 2/10 net 30. Both companies' credit sales amounts to 1,850,000. What does 2/10 net 30 means? What does 3/30 net 10 means?
Is that maybe 3 out of 10 days with 30 days in total?
It means 3% settlement discount if they pay in 30 days.
Okay.
2/10 means 2% discount if they pay in 30 days. Okay, so you must now have to calculate this 3/10 net 30. No? I can picture them giving you something like that. So let's look for an example with that. So now they say, determine the debtors collection period for both. Comment on the two companies. So let's determine the collection period. All right. Our sales was given 1.8 million and 50,000, 550,000. Okay, the accounts receivable per age. So you can see there, it's 141,960 and 207,850. Now, how many daily sales was there? Annual sales divided by 365. So you're going to take the 185,055 divided by your 365. So there was 5,070 daily sales. So the debtors collection period in days, 28. How did I get that 28? Just get my calculator quickly. Let me just see. My kop is nou so funny. Okay, so you take your accounts receivable per age analysis, the 141,960, and then you divide it by your daily sales of 5,070. It will tell you how many the collection the debtors collection period. So company R has a day 41 days debtor collection period. So what does 41 days say? Forty-one days is supposed not so bad in today's time. Okay, let's look at the comment there on the next page on 3112. Company P seems to be managing debtors with approximately collection period of 28 days as opposed to 41. Only 10% of the balance of debtors of P is overdue, while the overdue account of company R constitutes almost 30 days. The settlement discount of 2% offered by company R seems to be insufficient to motivate customers to pay early. Right? So company R gives a 2% discount and it's still not working. Make sure you know how to do this this calculations, eh? So let's look at managing accounts payable. So let's look at the example on 12.2. Sunflower Limited purchased inventory from Cosmos Limited for 100K. The credit terms of Cosmo is 1/10 net 60. What does that mean?
1% discount if they pay within 60 days, or is it within 10 days?
10 days. 1/10. If Sunflower pays within 10 days, it will need to wait. Something isn't right. Oh, yeah. You must pay it after 10 days, but within 60 days. Then you will get the 1% discount. Okay. So it's within 60 days. No, man, I'm talking nonsense here. It must be the 10 days is within 10 days. Net 60. What? Why am I so mixed up now today? Okay.
So
Let's
what is
just read
this?
here what they say. Sunflower Limited. Actually, I'm going to tell you now. If Sunflower purchased inventory from Cosmos on the 1st of March for 100, the credit terms of Cosmos is 1/10 net 60. The discount is for early settlement within 10 days is 1% discount. That one is the percentage. So it's 1% discount within 10 days. If Sunflower chooses to pay after 10 days, but within 60 days, it doesn't get the discount. Okay. So I think I made a mistake earlier. Or something isn't right here. One is the percentage, 10 is the days, net 60. Net means before the 60 days. But why bother saying net 60? Because you don't get even a discount. So we should just discard that net 60. So it's 1% within 10 days. So you pay it after 10 days. It is.
Aziza, I think the 60, because it says at the bottom, the period of 50 days from day 11 to day 60 is when the full amount must be paid.
Yes, yes. That's why I say why bother with a 60? Net 60 and net 30 doesn't make any sense because it doesn't mean anything. So it's 1/10. 1 means it's 1% discount if paid within 10 days. After the 10th day, you get no discount, even if it's up to 60 days or 80 days or whatever. Okay, so let's read there the second last part. If Sunflower does not take the discount, the company will actually only enjoy free credit for a period of 10 days. The period of 50 days, when the full 100,000 must be paid, comes at an opportunity cost of 1,000. Right. So the decision of whether to take early settlement offered is an example of a short-term financing decision. Let's consider what the 1% discount offered in example 12.2 equates to if we express it as an annual percentage. So let's look at it. So the opportunity cost of not paying within 10 days and using the 99,000 Rand for a further 50 days is 1,000. This equates to a nominal rate of 7.37%. So that is something that you people must also know how to do. Okay, let's just break that down quickly. So in this case, right, so 1% is Okay, the 1% is 1,000 Rand, right? And that 1,000 Rand is an opportunity cost. Do you know what an opportunity cost is? You know what an opportunity cost is? The cost of something foregone. That is an opportunity cost. So with this is 1,000 Rand, I need to make a decision. Am I going to take it, the opportunity, or leave it? So that's basically an opportunity cost. So therefore, the cost of not paying within 10 days and using the 99,000 for the further 50 days is 1,000. So this 1,000, right, Rand, if you divide it by 99,000, right, that's my opportunity cost, right? And there's 365 days in the year, right? But we're only going to use the 50 days, right? Then you can calculate it at 7.37%. Why is people lost? We're on page 312. So that's your opportunity cost expressed in a percentage. Okay. Now, in the next paragraph there, they say assume that Sunflower has excess cash on deposit in the money market at an interest rate of 6% per annum. Had they paid the 99,000 to Cosmos within 10 days, they would have forfeited the 6% times the 99,000 times 50, right? So there's a 813 Rand 70 cents that they would have basically been saving if they used there because they've got a 6% interest in the money market. By not paying early, they will forfeit discount of 1,000, which equates to 7.37. But in this instance, it would make financial sense to pay early and to take the discount. Okay. Because the discount is still more than what they would have got on the interest. Okay. Let's look below the gray block on page 313. Now assume that Sunflower does not have excess cash and is operating on a temporary bank overdraft on which it pays 11% per annum. So if they paid the 99,000 to Cosmos within 10 days, they would have had an additional 11% times your 99,000 times 50 divided by 365. So they would have paid interest of 1.491. So by not paying early, they forfeit the discount of 1,000 Rand. In this sense, it would make financial sense not to pay early and to defer it until day 60. So a period of 50 days is relatively short. So we use the nominal interest rate and discount rates that are not effective rates. You see what they're trying to show us here? They're trying to show us what opportunity is better. It's similar to if you paying, like if you have got two accounts, so one is bringing in money from an interest that you're receiving, but you're making the decision, should I pay the my account, my clothing account? It's something like that. So let's look at 12.3. The annual credit purchase of Sunflower from Cosmo is 1 million. The credit terms of Cosmos is 210, net 45. So what does this say to us? What is the 210 net 45? 2% discount within 10 days, but before 45 days. So there's a 35-day gap. These terms are strictly enforced. Any account holder older than 45 attracts interest at a nominal interest rate of 18% per annum. Okay. So after your 45 days, you get a 18%. The cost of other available short-term finance like a bank overdraft is at a nominal rate of 13%. So I want you to calculate for me what would the total cash outflows be in respect of purchases. So do number 1 and number 2 quickly for me, and then we can just discuss it when you're done. I'll give you 5 minutes. I want you to basically tell me what decision was better and why. Okay, the first one, let's just look at the first one. Okay, so it was R1,000,000 and a 2% discount because it says 2 over 10, 2 net 10, 2 over 10 net 45. So basically, we take the 20,000, 1,000,000 times 2% is 20,000. So our total cash outflow that we're going to give is 980,000. So that's the first answer. The second one, I want you just to tell me which decision was better. So if you calculate the nominal interest rate. Okay, I'll give you 2 minutes for that.
Is it 8.28%, Aziza?
Robin, are you taking the difference between the two and then you get the 8%?
Yes, that's what I did.
So it's 8% higher or lower?
No, let me just see what I did. I don't know what I did. Let me just double check.
Aziza, am I correct when I say that they would have paid an additional interest of 22,191 rand and 78 cents if they if they had not paid within the 45 days?
I didn't calculate it as such, but could possibly be because they're going to be paying an 8% higher
Yes.
interest rate. Yes.
Okay.
Okay, so their nominal was 13%, and if they paid on the last day, then they would pay 21%. So basically that's that, and let's look at our cash story. So managing cash is also very important. I'm just going to read the main headings. So the reasons for holding cash is for day-to-day transactions. So basically, you need to purchase things in the business or pay for various salaries, wages, blah, blah, blah. Then cash, you need to have cash. Okay? Will comply with any conditions of the bank for keeping the bank account. Okay, so the company will have to comply with the conditions of the bank. The bank may open a bank loan for the company on condition that the company maintains a minimum balance. So that's also part of the reason for holding cash. Pay for unexpected transactions. So sometimes something falls short, something break, you would be able to pay for it. Then you would have to have available cash. Invest in unexpected opportunities. So sometimes when the markets crash and you find an opportunity, so that is also important reason to hold cash. Okay? And you get your cash budgets, and we dealt with cash budgets earlier before. The sources of short-term financing would be trade creditors and bank overdrafts. Okay? The advantages of short-term financing is that it can be obtained at a much faster than long-term. Short-term financing, you can do it within a few hours, and the next day money can be available. Whereas long-term financing, it will take 2 weeks or 3 weeks, and the money is subjected to maybe 2 months or whatever. Okay, the borrower is not locked into a long-term commitment with possible early settlement penalties. So you can have a short-term loan and settle it within whenever you have it, even the day after you got the money, and there's no penalties. Okay. It offers flexibility of matching financial needs to short-term periods as a result of seasonal trading trends. Okay. It may not be necessary to provide surety for the loan. So if it's a short-term financing, you don't have to put collateral down. Okay. Whereas long-term loans, you always have to put collateral. Okay. The disadvantages of short-term interest rates are subject to fluctuation. And if you take a short-term loan out, you will find that your credit card is always like 20%, 18%, whereas your bond interest on your bond is like 7, 8%, and your medium-term loans is about 15% or 14, or currently now I think it's about 12 or 11. I'm paying 11. Okay, the banks may not be willing to extend the period of the short-term financing. So, for example, if the overdraft facility was granted for 3 months, they may not be willing to extend the facility beyond 3 months. You have to do a new application. So let's look at activity 12.4. Okay. Cash Flash Limited has 8 million in its current bank account on 1 January. On the 31st of March, an investment of 12 million will mature and pay out, together with the interest accrued on it for 4.5 million. Other expected cash flows, inflows and outflows for normal operating activities over the next 3 months are as follows. Blah, 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 blah. So if all our cash flows occur on the last day of the month, determine the cash position of cash flow of Cash Flash for the 31st of March. This should be very easy. I'll give you 5 minutes to do that because we've already done budgets. So this shouldn't be too difficult. So I'll just Okay. Did anybody come right with that answer, or are you still busy with it? Robin, will you? Rishana,
I'm here, Aziz. I'm just busy
are
getting the
you still
total
busy?
mark.
Oh, okay. I'll just give you 5 minutes, 2 minutes. Okay. So the 4.5 million, that's correct that the lady got all. I don't know what was in. Okay. So basically, you're going to take your cash flows at the beginning of January. Your expected cash flows are 52 million, right? your expected cash outflows of 56 million, and you got a 4 million in February, right? You take your February expected cash flows of 50. You only put cash in this item, eh? And then you take your cash outflows, so there will be nil at the beginning of March. Then you take your 58 million expected cash inflows, your minus your 70 million cash outflows, and your investment payout, which will be paid on the 31st of March. You say your 12 million rand plus your 4.5 million, right? Together with the interest, which was accrued. So you get your 16.5 million. So the cash balance at the end will be 4.5 million. There's just one quick example that I want you to do before we close off. And that is on page 320. I want you to do question 3 quickly. The net working capital of, okay? Calculate the net working capital and calculate the gross capital. Working capital.
Excuse me, Aziza?
Does everybody see that on page 320, question 3? Before we close off. We're on page 320, question 3. Okay, anybody, what is the gross working capital?
935,000.
Okay, just explain to the class how you got the 935,000.
I added all my current assets.
Okay. Okay, let's just take 2 minutes quickly and we do the net working capital. Okay, what is the net working capital? Anybody?
188,000.
Okay, how did you get that?
I took the gross working capital less all the current liabilities.
Okay, and the current liabilities was the accrued expenses of 91,000 and the trade payables of 656,000. So then you get your 188,000. These are all multiple choice stuff scenarios. So you need to make sure that you can do that, because I don't know what to expect, but if I were to think, they would give probably a lot of that multiple choice, like that 2 net 30, what is the answer there, and you know, the ratios that we did the other day and stuff like that. So I would think that you'd probably get a lot of that. But anyway, it is 4 o'clock almost. Let's call it a day. Anything from your side, Rukhshana?